All right, so in this video, I'm going to be talking about combining time and liquidity. This may be a little bit more of an advanced topic, but I'm going to try to break it down as simply as I can, as always, step by step here. And what I'm going to do with this lesson is we're going to go over it with some examples that we had on Friday. That is August the 23rd, 2024. So we're going to go over examples from this day, and I'm just going to break it down step by step and like how you can utilize liquidity and time to, frame trades around, right? So we're going to go from the higher time frame first, and I want to work our way down here. Okay. So like my bias, when I'm looking at this thing, like we got this thing, it comes up here, as you can see, on Thursday, GBPUSD. It's been ramping up for a good while here. So the thing is, like, day after day, this thing's been stacking. When I say stacking, it's consistently pushing out previous day's highs. It closes above it. Look, closes above it, closes above it. And it's doing this because it's drawing all the way up into this liquidity right here, and it takes care of it. But even after it takes care of it, it's not really showing any indication of resistance that is respecting that as resistance. It's just continuously pushing up here. So what happens is it's continuously doing until it continuously is doing this, not showing any hint of weakness until right here. What's this? Well, each candle tells you a story, and each candle holds information. So we see price right here come up, and see how it wicks up above this high right here, respects it, and close back down within the range. And then in the process, when it does that, it creates a new internal liquidity pool. So when a lot of folks see this, their mind's going to go to, this is bearish, because look how it respected that previous candle's high, and it closed back down within the range. So now they're looking for it to take out the low of that candle. But you've got to consider some other things. It's not quite that cut and dry, right? Now, I'll agree that that's a bearish signature. I saw that as well, and I was like, yeah, there's a bearish signature on the daily chart. It took care of this liquidity, because guess what? There's liquidity residing above that high right there. You see? And then we create internal range liquidity on the close right there. So it took out that liquidity. So then the mind frame behind this is, okay, it took that liquidity, it failed to displace above it, closed in the range. The next key liquidity pool that it's going to seek is going to be the low beneath this candle and this imbalance, right? But then so why did it push up though? So if that's the case, how you're looking at this, because why did it ramp up then? If it's given these bearish signatures, why did that happen? Because you got to do top-down analysis. You got to do top-down analysis to really get the full picture of what you're looking for here and understanding liquidity and time, etc. So go to the 4 hour now, because this is what I do every single morning. I start from the higher time frame, and then I work my way down. I went from the daily, then you know what I did? I went to the 4 hour chart. So in the 4 hour chart here, let me go to market replay real quick, just so it's not as scrunched up. All right, so, and I did plug this in my free Discord chat, by the way, so I'm not just going in here now in hindsight and, cherry picking like most people do. 100% called in my free Discord chat. You can join it, go check for yourself. Like the thesis on this was still bullish right here in the short term. Now, my mind frame is, yes, I'm looking for a reversal after it takes out this high, but right now I'm bullish. But Mike, you just said in the daily chart it's bearish. Now you say it's bullish because, again, this is where we talk about it's not the time for it to do that yet. It's not the time for that to do that yet, okay? Now, because here's the thing. We got that imbalance down below right there. That was noted on the daily. We got that weak close because you can see how, it came up and it took out these highs, and then it had that rejection. It failed to displace above it, you see? But what's the market structure? Because then you got to, when you're doing this top-down analysis, you got to ask yourself, okay, what is the market structure that we're operating within? Ask yourself that question. Bullish, right? What recently was taken here? Higher time frame sell side, right? Look how it respects it too. So you're taking out higher time frame sell side recently, and now you're having a rebound off those lows, bullish market structure, relative equal highs up above. So then you can see how, like, yeah, we got that signature on the daily, but you know what that probably means? It's going to want to take out the opposing buy side first before it can make the trip down into that. That's why, like, I don't look for like a little retracement within this range and then this thing to sell off. I figured it was going to run out these highs here because it has higher time frame sell side taken. But I can only know that if I'm doing top-down analysis. You can only see that if you're doing top-down analysis. You get the 4 hour higher time frame sell side taken. So because of that higher time frame sell side taken, it's going to gravitate to the opposing buy side up above. You can see we come into Friday here and it's consistently already gradually pushing up here off these lows. I wasn't not looking for it to come into this range and then sell off, as I was saying. Okay, you know, somebody may look at that and that's what they're looking for. Say, oh, we got this, we got that daily candle, we got the indecision candle, we got that imbalance down below. So I'm gonna look for it to take care of this here. I'm gonna look for it to respect this range. This was the absolute high that was put in, so this is resistance. So because I got that down there, this is a resistance. I don't want to see it go above this high right here. That's exactly where it's headed, because you know why? It only has higher time frame sell side. Look at the market structure, the higher time frame sell side taken. That's the next key liquidity pull that is going to want to seek in that case. What else do you see in there? Because then that's what you got to ask yourself. Well, within that range, what do you see in there? Nothing. You did have a little imbalance there, but it's now an inverse fair value gap. Could close above it. So there, what do you see in that range up next? That's resistance. Nothing until right there. It only has the higher time frame sell side. It has classic stopper and signatures. So if it has classic stopper and signatures, it's bullish market structure. There's nothing in this range is resistance. Why would it come down into this next? Why would it do that? It has no reason to. It has the necessary fuel right now. Yes, Asian session lows is still intact too when it was pushing up. But again, look at the higher time frame. It doesn't need to visit that right now. It does not need to do that. So he wants to seek the opposing buy side next because it's already taken out this higher time frame sell side. And it does so. Now also to kind of rewind a bit, what we had noticed on this thing was we had this weekly buy side liquidity up above as well. It's taking care of it now, but on, you know, earlier it hadn't. We still had this level intact right here. It was like right above price. So we noticed that as well when we talked about it in chat about how it's going to be drawn to this high right here. And this is very interesting because we understand that's our ultimate draw on liquidity. So if that's our ultimate draw on liquidity, you got to consider that. It doesn't mean you still can't get a short play before that, but you want to be nimble. And I'm going to tell you how to connect that. So if you understand, because you can see on my 4-hour chart, you see how it hasn't came up. You can see like right up here at the top of my chart. You see that level. You see how it hasn't taken care of it yet. But we already established it's drawn to that. It's bullish market structure. That's what it's wanting to take care of. Okay. So then the next question is, okay, if we're ultimately drawn to that weekly level up there, as we could see, and it's taking out this buy side, does that mean you'd want to stay away from a short off this level right here? You don't got to. You don't got to, because like I ended up getting a nice short opportunity on this on Friday, and it still hadn't taken care of that high yet. But you got to be nimble. You want to be nimble and you want to take a low-hanging objective. You don't want to be too aggressive with it if it has a draw up above like it does on the higher time frame, because that's what it's gravitating to. But it's still taking out higher time frame buy side here. So when we get something like this, what do you look for? So as I already established, Asian session lows is still intact down below, right there, which is what you want to see for a bearish scenario. Again, now we're running up, we're taking out this higher time frame forward buy side. Remember, it's still bullish. The trend is overall bullish and it's drawn to that weekly up above. We established that on Friday. But I'm still hunting for a short, and I'm going to show you how to navigate this. And I'm going to tell you, like, the key thing to note about this, what you want to take away from this is when to stop looking for shorts. So we end up getting our 15-minute shift here, as you can see. This was my setup that I had on this on Friday. This thing came up and it took out that higher time frame 4-hour buy side. I have a higher time frame point of interest frame in this. Okay. And I also want you to notice how Asian session lows on this displacement has not been taken either. That's what you want to see for a higher probability deal. Like the least amount of liquidity, this is a key note moment. The least amount of liquidity taken, the better for, you know, now for your, I'm talking about for, like if it's a short deal, you don't want to see a huge amount of sell side liquidity, big levels taken, of course. You don't want to see that. So if I have Asian session lows down here, and it hasn't been taken, and then it gives me a pullback without doing that, but I have this higher time frame buy side frame in it, that's going to be a higher probability deal than if it just came down right here and displaced beneath that level and then got to push up. Because what you need to think of it is like, this has more fuel now. This has more fuel once it's able to take that liquidity. And that's what you'll see with a lot of your market structure shifts that fail, is because it has too much liquidity taken. That's what you'll find. It has too much liquidity taken, so the less, the better. So this has higher time frame buy side frame in it, but don't forget, it's ultimately drawing to that weekly up above, and I'm fully aware of that. I'm fully conscious that it's coming up and it's going to take out that weekly here soon, but it doesn't mean I still can't get a short play. You just got to understand how to navigate it correctly and shoot for the low-hanging objective. And you got to understand where you are in the bigger picture. Okay, so I have Asian session lows right here, never taken. That's what I really want to see in this case. And of course, you get this higher time frame level down here you don't want to see taken. Like if this thing, for example, let's say this came down and it cleaned out this sell side, right? And then it gave a push up into a am I interested in shorting that, folks? Am I interested in shorting that right there? Let's say it came down, it cleaned that out on this big shift. Let's say it didn't give any type of pullback and it just got crushed all the way down to its lows. And now this thing's pushing up into a premium within this range. And a lot of folks are going to see that and they're going to be like, oh, it's expensive now. Next leg lower, but it only has enough liquidity. It's bullish market structure. You got to draw up above. Really think about that. Think about what I'm telling you. I'm giving you gold right here in regards to liquidity. This is why a lot of your shifts fail. It's because you got to understand where your liquidity's at. So if it's already taken out this big level, or even Asian session lows, like that's a lot. That's a big liquidity pool, and you take care of that, and it comes up here. You don't want to trust that. Will still be cases where it'll fall through, sure, but we go off probabilities. So if I see something like that, and it's overall bullish market structure, and then I have this thing, I have that weekly buy side. I want to remind you, this is a very important point. I have a weekly level up there that is drawn to right now. We had established it's drawn to that level. It wants that level. And this is bullish market structure. And then you get a big displacement right there. You're looking for your shift. You get a big displacement. It's taking out all this liquidity. You have all that sales liquidity. That's going to frame that next leg up into that buy side up above. It's going to gravitate to take care of that. Because think of it like in simplest term, it has more fuel. Think of it like a car. All right, to reach that destination, you're making a trip. To reach that destination, you're almost on empty. You need to fill up the tank. You need to fill it up with gas. Then you stop, you fill up with gas, and guess what? You have more fuel to make the next trip up into your next destination. That's what price is doing here. It's filling up the tank. So guess what? Think of like liquidity as the gas. Liquidity is the gas for price. Okay? So the more liquidity you have, the more gas you got in the tank to make the trip up higher, and it's bullish market structure. So if I'm getting a trade here, I want to see as little as possible. I don't want to see that thing have a full tank. No, like it's taking a higher time frame buy side, and that's what's framing my trade right here. And now look, I got my shift right here happening, but look what happens. This is very important. Look what happens here. Look what happens. We end up getting a leg up into a premium without taking out Asian session lows, without taking out this level. And another thing that I had noted on this is there's no 1 hour sell side taken either, which is what I like seeing on my trades. Look at this. Look at this. Folks, there ain't a lick of anything in there holding that up. When you see something like this, where you have none of that opposing liquidity taken, but you have such a big higher time frame level like this, framing your trade, because that is higher time frame buy side liquidity. That's a big level of liquidity right there that's framing it. And you have any opposing sell side that's of any significance, you're looking at an extremely high probability deal. An extremely high probability deal. Listen to what I told you, because I just gave you gold on a platter right there. Your highest probability shifts are going to have these signatures. And then, there'll be people that go in and say, oh, but this one took out this liquidity, and it's still, there's always going to be those cases. I'm telling you, if you stick to this criteria and you have this understanding of liquidity, market structure, where your draw is, then that is what you're going to get such better follow through with your plays. And then we also saw another confirmation here. I don't need this for my plays, but whenever I see this, it's just another thing added that makes it higher probability. It gives me even more conviction whenever I see the swing high as well. So like on this 1 hour here, this thing, it highs in the middle, look right there, lower high on the left, lower high on the right. Here you got 3 candles, and that one closed red right here. And then look, that's what I call the third candle draw. It's just a swing high. It's the low of that third candle right there. That's what it's going to gravitate to. It's going to gravitate to the low of that candle. And also there's no liquidity taken either, major liquidity taken on that push lower. So we can trust that that's very likely what it's going to be going for. It already has this buy side frame in it. And now look how it comes up. It takes out the liquidity of that previous 1 hour candle right there. There's liquidity above each of these candles. It takes care of that. But then if you go down to the lower time frame, pay close attention. We got this imbalance in here, but we still got our drawdown below. You see, it's coming up and we got this drawdown below. And then we have our internal range liquidity, which is providing you an entry area. The enter off of OTE or a premium, however you want to do it, or you just enter into these imbalances up here. And that frames your short play. You see? And you can short that even with having an understanding that it's ultimately drawing to that weekly bias liquidity up above, because I understood it's going for that. I completely knew that likely was going to be the case, but it doesn't mean I still can't get a nice short here before it does it, because it has too much liquidity right here in the short term. So remember, like the analogy that I was using a moment ago about price needs more fuel, it needs to fill up the tank of gas. This needs more gas before it can make the trip up into that weekly level, because it's being met with higher time frame buy side. So because it's being met with higher time frame buy side, it needs to dip down. Where's the liquidity at? Well, you create this liquidity right here. You have agent session lows as well. But what you'll notice happens here is this ends up becoming what later? This ends up becoming 1 hour sell side look. That closed and creates a swing low on the 1 hour chart. Lowest low in the middle, higher low on the left, higher low on the right, swing low. That's 1 hour sell side. So guess what? That's a bigger liquidity pool now. That's not like a 15, that's a 1 hour liquidity pool now. That's more fuel that price has available to it. Okay? And this thing's pushing up its overall bullish on the 1 hour too. That's the thing. That's where you want, that's why I say like you got to be nimble, because now this is giving it that fuel it needs. You see what I mean? And we get our move lower. So I locked in gains once it came down into the sell side right here, because that's my low hanging objective. As I said, you want to be nimble because you got that draw up above. And guess what? Now it has more fuel. That is liquidity. That's 1 hour sell side. That was the fuel. It filled up the tank. It filled up the tank of gas. Now it's ready to make the next destination to those highs. You see, now it did have news to assist it as well, but you get the gist. That was what, and that's why, like, if I have a 15-minute bearish shift, or any like a 15-minute bearish shift, a bullish shift, I don't want to see a higher time frame swing low or swing high, depending on whether it's a bullish or bearish opportunity taken. I don't want to see that 1 hour swing point taken. I don't want to see that higher time frame 4 hour level taken. Like I like to see as little liquidity as possible taken in the direction of where what I'm looking for my trade. You want to see a bunch of liquidity taken. For example, if it's a bearish opportunity, of course, you want to see a lot of buy side taken. That's what you want. The more liquidity, the better. But what I mean is, you don't want to see a lot of sell side taken on the push lower. Okay, because as you know, as we always say, like price moves in the direction of least resistance. Really think about that, and then think about it in terms of its liquidity. Price moves in the direction of least resistance. Okay, that's a lot of resistance in the short term that it has right there because of the higher time frame buy side. But you don't have that opposing sell side yet. So what does it need to do? It needs to create it. And that's what it does. It creates it, because then you have a 1 hour level that unfolds a bit later, and then it comes down, takes out that 1 hour level. So now it has a bigger liquidity pool. Is a 1 hour not a higher liquidity pool or a higher time frame than a 15-minute? It is. It creates it on the 1 hour because it wants that fuel. And then that is still overall bullish. Don't forget, this is why you got to understand what market structure you're operating within, because it's overall bullish. But does it see that means like you could still get a nice scalp, but then you could look for your next leg up. And that's, you know, what happens, because like we were overall bullish on the thing. I can't take too much credit for it because it was new, or Powell speaking, but you get the deal. That is like, this is applicable to, you know, like it's not just like a one, like liquidity market structure. It has the same signatures. It never changes. Just understanding that's going to, you know, make your trades much higher probability. I really don't want to make this video too long, but I think we'll go over one more trade because, you know, of course, you know, long videos people tune out because, you know, their just attention spans are just rotted and they can't pay attention to anything. But we'll talk about EURUSD as well, because I want to go over this because it's a little bit of a different scenario, and I'm going to tell you how you can. I'm giving you a lot of game in this video. I'm giving you a lot of game in this video in regards to liquidity and stuff. So for the folks that can actually sit through it, they're going to get a lot of knowledge. But I'm going to teach you a different scenario about how whenever we have a case like this, because EURUSD was a good example on Friday. This one, unlike GBPUSD, it did take out more liquidity. All right, so let's pull up the chart. Let's go to replay. Again, plugged all of it in chat as well. In the Discord chat, free Discord chat. There will be a link to that in the video description, of course. All right, so EURUSD. Here was the thought process on Friday. We had this thing. It's overall bullish market structure, but then we had this swing high put in, which is a bearish signature. Highest high in the middle, lower high on the left, lower high on the right, third candle draw, and it recently took out major buy side right there. You see that? That's weekly buy side, and then we get the swing high put in. That's a bearish signature. But then why did it push up? That's the next question. Like, what do we learn from this? Like, why did this push up? It goes back into, you gotta do multi-time frame or a multi-time frame analysis. But look at what happens right here and pay close attention. We get that swing high, but there's liquidity beneath this candle. That's Wednesday's low. Okay. Remember what I just told you about how it's bullish market structure on the daily, but the 4 hour as well. There's liquidity beneath that, and it fails to displace beneath that. So think of it like it picked up the fuel. It has that fuel now beneath that low, and it respects it. It didn't displace beneath it either. So it's respecting it as support. And not only do you got that, you got that imbalance there. Each candle tells a story, remember? Go to your 4 hour now. So when we're looking at this thing, what we also see on the 4 hour chart is we had this thing come down and higher time, just like with GBPUSD, we have the higher time frame sell side on the 4 hour. Now, of course, that's the same level I was just talking about. I just adjusted it on there a little bit better, but that was Wednesday's lows. All right, so the low of that candle that we were just talking about on the daily chart, that's higher time frame sell side on the 4 hour chart that it's taken care of right there. You see? So we did that on Thursday, and then we had that bounce up into Friday. You see? But here's the thing. This is bullish market structure, folks. That there's no shift in there. All right, it's respecting that low. That's not a shift. If it was a shift, you want to see it crush that thing, and then that would reflect in that daily chart as well with a strong displacement, as we were saying. You don't have that. It's still bullish, and it's respecting that low. So because it's respecting that low, we have our opposing buy side up here. But Mike, what about that imbalance in there? That's true. You do got an imbalance in there, but what did it do with it? Well, that is what we call an inverse fair value gap. That's an inverse fair value gap right there. You see how it closes above it? So it's telling you in simplest terms, it did not respect it as a level of resistance. And now you combine that with the fact that it's bullish market structure. It took out higher time frame sell side. Now you get an inverse fair value gap. It's going to seek what next? It's going to want to seek that opposing buy side here. Okay, because it's telling you that. Listen to price. The candles are telling you everything you need to know. Each candle tells a story, as the saying goes, right? So that's what you see happening right there. But that does not mean you, just like I was saying with GBPUSD, that does not mean you still can't get a potential short play. Okay. I can have the understanding that, you know, this thing is coming up into this buy side up here. You see, I can have the understanding that it wants this buy side up here, but there's still resistance in here that you can frame and scalp a short off of. But this one was a little bit different, and I'm going to tell you how and how you could navigate it. Because this ties in perfectly with the previous lesson that I was doing on GBPUSD. If you were paying attention, we were talking about you want to see not that much liquidity taken. Like if it's a bearish scenario, you don't want to really see a big bucket of sell side taken, preferably. So we have Asian session lows right here. Because Asian session, it begins at 19, which is 7 o'clock Eastern time, and it goes into midnight. So we have that, it begins right there, and that's the low. That's the low of Asian session. And then remember, we have our previous day's lows down here. So what happens here though? Because we've already concluded that we have that inverse fair value gap. So it's going to ultimately want higher prices. So we can conclude that it's ultimately drawn to these highs up here probably. We can kind of see that now at this point. But what happens is we end up taking care of what though on this push up? We did rebalance that fair value gap. So even though it's an inverse fair value gap, it's still right now, at least in an expensive area. Like it's still being met with resistance. And it's also taking care of Asian session highs buy side. Asian session, again, 19 to midnight. So you can see what happens is we have this leg up right here. We're making new highs into London, and it's running out a new high day, of course, but it's already cleaned out Asian session highs buy side. You get this imbalance up here. That's a lot of ground, folks. This is what I mean when I say I can have the understanding that it's ultimately drawn to this buy side liquidity up above, but price is going to gyrate. It's going to, that's what price does. It's not like, oh, we're drawn to these highs up here, one move up higher, not like no type of pullback. No, price gyrates from liquidity to liquidity. Okay. So when we have this, I know it's probably, it's still going to give it an opportunity here probably, or it takes care of that. So I end up getting a displacement here. You see, look right there. Fair value gap, strong close, signatures, for a 15-minute shift, and it does have the liquidity to frame it. This one doesn't have a higher time frame level. It's not as clean as GBPUSD. I want to make that clear. This does not look as good as GBPUSD. And then you probably, if you were paying attention to the previous scenario, you also noticed something else in here that's happening, right? You noticed something else that happened here. What did it take care of on that move lower? Well, it took care of Asian session low sell side right there where my cursor's pointing. On that push lower, it did. You remember what I was saying? You really don't want to see a lot of liquidity taken in that case, because we took out Asian session highs buy side, sure, but now we're taking out Asian session low sell side, and it's ultimately drawn to these highs. That ain't as good. It definitely ain't as good as like GBPUSD, where you had higher time frame buy side taken and no Asian session low sell side, no 1 hour sell side taken. Because that's the thing, it's Asian session low sell side, but if you were to go to the 1 hour chart and you look very closely, what you'll notice is this also took out 1 hour sell side. So I don't like seeing that with my 15-minute plays. I don't like seeing a 1 hour liquidity pull taken with a 15-minute shift. Will you still get follow through? Yes, of course, and it depends on other stuff as well. But that's a signature that I don't like to see because I want the highest probability deals. So if I have 1 hour sell side taken right there on a 15-minute, that's a higher liquidity pull than the 15-minute. I don't trust the 15-minute as much, especially if it's something like Asian session lows, which is a big liquidity pull. We're not just talking about some random short-term low within a session. We're talking about the absolute low of a session. That's more significant. That's a big liquidity pull. Okay, so it takes care of that, and then we see this, and guess what? Inverse fair value gap too. You see that as well. So then this is what I was saying, and then I posted it in the free Discord chat. What I told you guys to look out for was, okay, I don't really like this on the first retracement higher anymore. That's what I said. But what you could do, I wouldn't count it out completely. That's what I was saying. I wouldn't count it out completely. What you could do here is, because you have a point of interest. You have this 15-minute, okay? And it is a nice displacement. This is a key note moment. Pay close attention, because this is how you can do it in like a safer manner. Look for the pullback into the premium that you would be, because in this case, I wasn't interested in entering on the 15-minute. Or your Fibonacci on that high to low, it comes up to a premium, doesn't it? It does. So it's now in an expensive marketplace. But I want more confirmation now, because it took out this liquidity right here. That could very well be a 15-minute error shift in market structure. But because it took out this liquidity here, 1 hour sell side, Asian session low sell side, I want to see it prove off a premium. Because guess what? Price is fractal. What occurs on one time frame occurs on another. The same signature that you see with this 15-minute shift will occur in a lower time frame. So why not just, let it come up and confirm off that area? If it does confirm off a premium, then at that point, you are safer to look for the push down into that low right there, the low of that 15-minute, if it can confirm on the lower time frame off its point of interest, because it is telling you, price, you're not predicting, price is telling you that it's respecting that as resistance, and guess what it does? Zoom in, lower time frame. Look. That's where it came up to a premium within that 15-minute. And then right here, you get a 5-minute bearish shift off a premium. It's telling you it's respecting its resistance. Fair value gap, strong close. So what happens? Comes up into a premium within that 5-minute now. And now you're safer to look for a push down into this low down here. And it cleans it out. You see? That's how you would deal with it in those scenarios. If it does take out the liquidity and you want more confirmation, because that's your best bet in that case. If you want the higher probability deal, is to wait for more confirmation on the lower time frame then. If you don't got that liquidity taken, then you can just do like the first retracement like we did with GBPUSD over there. But in a case where it has a little bit more liquidity taken, wait for the pullback, wait for the extra lower time frame confirmation, and then you can look forward to clean out the low at that point. Okay. And yeah, and you could see what happened. It did end up ramping up later. Again, there was, it was Powell speaking that influenced it, but you can see like that higher time frame chart though was completely like, it's understandable. Like it wants these highs up here because it's overall still bullish, you see? But that doesn't mean you still can't get like a little scalp within that range if you have an understanding of liquidity and time. I think that's where I'm going to wrap up the video because it's already been pretty long. But I hope you enjoyed, getting its value. If you did, leave a like, subscribe to the channel. I'll catch you later.